Hi there, this is Catherine Tyndall. Today I've got Danielle Howard on the show. Today's episode is all about charitable giving, and specifically, we're going to be talking about DAFs, donor advised funds, in today's episode of Financial Advisors Want to Know. So, just to give a little background on Danielle, she's a CFP, she's located out in Colorado, and she has extensive experience in this space. She's put together workshops, she's built all sorts of tools and speaking in the industry, and she just has a lot of experience around this topic and just advisor, everything that goes into being an advisor in general. She's been in the industry for over 30 years, and she's been just really dedicated to making these complex topics more digestible for clients, and then also helping give information into the advisor space. So she agreed to join me on today's episode talking about these considerations that you should have when talking to clients about donor advised funds. So thanks for joining me today, Danielle. Thanks for being here.
Thank you for having me, Catherine.
So a little bit in the pre-show, we were discussing how this is a common space where there's a lot of interaction between the tax professional and the financial advisor around what's happening with charitable giving. But I'd love for you to just open up with, what in your experience do you think advisors really need to be paying attention to when it comes to these donor advised funds and common problems that you've seen in your practice with dealing with them?
I think a place for advisors to start is even opening up that conversation about where a client is at with their charitable giving. Is that even on their radar? Many times advisors don't even broach into that space, and
Mhm.
it can be a really powerful value add to an advisor to bring up the idea of, are you charitably minded in the past? How have you given? Are you a check writer, or would you like to get more creative and efficient and effective with your giving? So having it as a topic in the client conversation is, I think, the first step. And that may be a whole nother 15-minute episode. But once you start having those conversations with clients and they're going, yeah, I do want to do some giving while I'm living so I know where it's going, then the next step is figuring out the right tool to use. And today we're going to be talking about the donor advised funds. Always nice to be talking about that when the market is up, and you may have clients that have some gain in their portfolios or maybe some individual stocks. I have found it really useful for clients who have inherited wealth and have then held on to that wealth and have had continued gains and want to do some charitable giving around that space, don't need an income off of it or don't need that particular asset, whether it be a stock or a piece of real estate or some of the more creative tools that can go into a donor advisor fund, and to look at the how that would play out as part of their planning.
Yeah, and especially on the tax side of things, they're a really powerful tool that I've seen within my own practice. It's very common for clients to get involved with them because, especially when people are going through those income changes and they know that they're going to be giving lump sums to, they know that they maybe want to have a consistent output that they're giving to charity every year, but it makes more sense on the tax planning side to sock everything in one year, even though the charities are going to have more of like a drip effect on the back end. It can be really powerful on the tax planning side. What have you
Right.
found for actually getting? So, say you have a client that comes in and they're interested in doing this, they are charitably minded. What's the steps that you take them through in the process of actually getting it established? Coordinating with the rest of maybe their estate planning team, their tax team. Like, what's the general process you take people through when they say yes to doing this?
So once we have the yes and understand that the DAF is going to be a good tool, we may bring in the CPA, the tax advisor, to get started and just to look at their tax returns to say, would it be appropriate to, as you referenced, that kind of chunk and dump? If we were to look at, well, right now up until end of next year, we have the opportunity for taking different deductions, whether you want to do itemized or do standard, and really lump a big gift into the itemized side of the tax column. So, discerning a direction, working really closely with the tax advisor to say, all right, let's look at the positions that we're wanting to move into the donor advised fund. What would the tax benefit be? Put that into their tax planning. Again, I'm a CFP, I'm not a CPA, so there's those fine lines that we need to ride. But I think the team approach and looking at what is best for our clients, and from the planning planning side, if as an advisor, you bring that plan to the CPA, you say, how would this play out for their taxes? Then you maybe, customize it a little bit. But the idea of if it would be beneficial to dump it all into 1 year, vetting through their positions to discern what's going to be the biggest impact. I've got a client who bought Apple way back when, and she calls it her giving tree. And so every year we decide how much of her Apple stock does she want to put into the donor advised fund, because she's had so much appreciated gain with it that we can, again, be strategic with it, whether we want to do 2 years worth of dumping into, to get the itemized deduction and then take a standard the following year. So, I think that first step is, yes, the conversation, building the team with the CPA, the client, and the financial professional to discern what's the best approach, setting up the account. If the assets are in the advisor's care, how do you get it moved over? Sometimes they're outside at a different, custodian, or held directly someplace else. Actually getting the money moved in a timely manner before you hit end of year deadlines, and then communicating, that with the tax advisor, the CPA, to say we took this, getting them the proper, tax documentation that shows what went into the donor advised fund. One of the challenges we've seen is, again, in conversations with clients, how this works. Because many times they'll set up a donor advised fund, and then they'll start giving money out of the donor advised fund. And the charitable organization sends the client a receipt. Thank you so much. And the client then takes that receipt, gives it to the CPA at the end of the year, and the CPA knows that they made the gift to the donor advised fund, which is a charity in and of itself. And then they think they, also gave to the charity outside of that, and the client ends up double dipping, and we don't want to do that.
Yeah, no, that's a very common concern. Something else I wanted to ask you: who have you enjoyed working with on the administration side for the donor advised funds, in terms of who you've been opening accounts with, who you've looked at, who you've worked with clients who you've enjoyed?
Okay, we custody through SEI, and they use Renaissance for the donor advisor funds. I know all the big custodians have them. I don't know. Again, the idea with a donor advised fund is that you would transfer the appreciated assets in it, probably sell them at that point, and then look at, creating an investment policy statement with the client, going, okay, this is going to be maybe a little bit more conservative than sitting all in one stock. And, then setting up the distributions, the advised, where they want to be sending their distributions to on a monthly, quarterly, annual basis. But you want to find a organization that has a really good reporting system that, does the vetting of the charitable organizations in a timely manner, is you need to give them the paperwork that said, this is the charitable organization that the client wants to contribute to. They need to check it out, make sure it's a viable 501c3, and then, follow through with how the client wants to be, sending their money to those organizations.
And what would you say are some, besides the with the client sending the receipt back and accidentally double dipping on the charitable deductions, which I've seen that attempted in the past, so I that is a real risk. Are there other places where you've seen things go wrong, that it's a good idea for advisors to kind of try to build a process around preventing some of these mistakes, or common mistakes that you see happen in this process?
Yeah, I think it's important for advisors to also, have a workflow or some sort of a process to make sure that the client's wishes are followed up on, that those, that money does go out to the organizations. Very rarely, but I have heard it happen, and experienced it once or twice, where, you send paperwork in and nothing happened. And so to have a system set up with whatever DAF organization you're using, with Fidelity, Renaissance, the multitude of organizations that are out there, but just to check to make sure that whether the client wants something to go out to an organization on a monthly basis, we have sometimes that they'll have systematic distributions going out, and then maybe there'll be one or two one-offs during the year that I want to contribute to this organization twice a year versus every month. And those are the ones maybe sometimes that fall through the cracks. So just a way, checks and balances to make sure that checks are being sent out, and that, again, the reporting gets done in a way to both the client and to the tax advisor that's clean, clear, and gets reported on the tax return properly.
Yeah, and so with the reporting on the tax return, this was something we were talking a little bit about pre-show too, is that I've noticed there's kind of different camps within the tax profession around how proactive they are with the clients that they work with. A lot of them, it's, if you don't give me the documents, I'm not really, it's, it's on you, client, to get everything over to me, and I will make sure it gets on the return. But if you're not the one communicating that to me, I'm not going to be asking for it. And I think one of the things that's probably an interesting conversation for advisors to hear is, how have you been collaborating with the tax professionals to make sure that those things are getting where they need to go? What are some issues that you've experienced in that line of communication with existing tax professionals? And then just, any recommendations you have for that part of the process, because at the end of the day, for a lot of people that are pursuing these kinds of charitable giving vehicles, a lot of it can be tax motivated as well. And so if it's not making it onto that tax return properly, it negates a lot of the benefit that oftentimes the clients are looking for. So what does that process look like for you in terms of, ensuring that smooth transition with the tax professional?
We make sure that we've got a working relationship with the professional. Again, we have different tiers of clients that we work with, and it's primarily our top tier clients that we've got, a more working relationship with the tax professional. When we do the planning for our client, we're the type of account, we do planning first, and then, the asset management follow suit. And so we will put that out right at the beginning. We want to work closely with your CPA, and whether it's in the planning process, there may be aspects that we're going back and forth with in conversation with the CPA, or if then we're managing clients' money, then it's going to be an ongoing. We will let the accountant know. We will be sending you, whether it's 1099s, whether it's the, variety of 1099s for different distributions. Or contributions, whether it was to a DAF. And then what we would also, in regards to the DAF, make sure that the accountant gets a list of, okay, and here's all the charities that it went out to, so that if the client does, just bring that pile of paperwork in, as they do. They just get the envelopes in the piles and they stack it, that the accountant would have a double check cross-reference to go, oh, no, this went through the DAF. You didn't write a check for it. And, to make yourself available. Accountants, like we talked about, there's these times of year that they're up to their eyeballs. And if they have a quick question, to make sure that we're available and can get them what they need when they need it, is important to us as a value add to the client.
Yeah, absolutely. Well, as we wrap things up, I wanted to, again, say thank you for joining me on the podcast today. For people who are listening to this, other advisors who are listening, how would you like for them to engage with you? I know you've got your Wealth by Design for You website, but how would you like advisors to engage with you?
Yeah, I've got the Wealth by Design website allows you to schedule a Calendly appointment if you do have any questions about what we do and how we do this, or you can reach out to me on LinkedIn. Always happy to encourage or talk different ideas with folks out there. I love this industry, that everybody is really about raising all the boats, and especially as we're moving more and more into, it's about building relationship with clients. It's about, life planning versus just, managing the various aspects of assets out there, that, we are cultivating, new narratives in this area. So yeah, I would say either LinkedIn or on my website, you can set up an appointment.
Wonderful. Well, thank you so much, Danielle. Thanks for joining me today.
Yeah, appreciate the opportunity. It's been fun, Catherine.